What's up, guys? Michael here with Bear Coast Real Estate in Dallas, Texas. I'm a real estate agent here in Dallas. Today is March 13th and we have the new weekly market data out. We're going to be covering all of Dallas County. We're going to see which cities and zip codes are heating back up, which ones are cooling off, where the opportunities are as a seller, and where the opportunities are if you're a buyer looking in the market. We'll be looking at things like median list price, days on market, how many homes are having price decreases, how much inventory is there, and how many new listings are coming on. But before we begin, it would be a huge help to me if you'd hit the like button, and if you're interested in this kind of data, go ahead and subscribe. Also, mortgage applications are up for the first time in probably 3 or 4 weeks, ever since rates started rising back up closer to 7%. Every week, mortgage applications were getting lower and lower. And as of this week, we had a 6% increase. So for the first time in the last month, people are starting to come back. And we actually had a 6% jump in people applying for mortgages. So a good indicator that demand is starting to come back. Okay, first up, let's look at Dallas County as a whole. The median sales price you can see here on the weekly chart is definitely trending up. You're not going to see that reflected in the 90-day yet. But what you can tell, and what we're looking for here really is trends. We're trying to figure out what's coming up next. So you can see we were definitely trending down for a lot of weeks, and for the last several weeks we've just been completely flat. But if we look on the weekly, so this is a 90-day moving average. That's why it moves much slower, but it's much easier to identify clear trends. So as of now, at least what we could say is we've stopped going down. That's pretty clear even on the 90-day, but on the 7-day, it's a little different. It's that we've already started going back up. Let's look next at the median days on market. We can see that it's definitely dropping again. This was all when rates were rising like crazy. Inventory started building up, which was great. But now people have gotten used to these high rates, and any drop in rates, people are coming back and buying it up. So we're dropping inventory again. We're up to 42 median days on market, which seems like a lot if you were down here buying when it was 7 median days on market. But if you look back historically, even here, 17, 18, 19, or January 2020, right before the pandemic, we were at 77 days on market was the median. And if we just look back here, we were 70 days here, 35. So you always want to be over 30. If you want a healthy market, you want to have the median days over 30. You can see so 63 to 35 around here back then. So being at 42 is not some big market crash or anything like that. It's actually really good for the market. It means at least one of our indicators is getting back to normal. Even though prices are still going up, inventory is still dropping, at least we're starting to see median days on market is starting to get back to a normal number, which is good. Okay, looking at inventory is very clear to see this is what we want to be normal if we're just looking back. I left these 17, 18, 19 here just so you can quickly look over to the left and reference what normal looks like. So around here we're like 5,000 homes a week. And right here we are at 2,300, so still less than half. And here we were as high as 6,500 homes a week. That's what was available on the market every week. So still incredibly low, and it's trending down. This is not what you want to see. So to get back to a healthy market, we need pretty much all of these indicators. So days on market is getting there. That's good. But then we need inventory, and we need prices also to stop going straight up, which is a function of supply and demand, which means we need more supply. We need more inventory on the market. So as long as inventory is going down, you can expect the prices are not going to be coming down. Up next, this is the percent of homes that have had a price decrease. So you can see from when rates started going up, a lot of homes were starting to have price cuts. We peaked around here at 47%, which if you're looking back at the other years is a totally normal thing to do. Up here, 45. So again, even what just happened where there were all these price cuts and everyone was like, the market's over, that was still just getting back to normal. And then if we look here, we're at 36% and dropping. So I would say the number of price decreases happening, that's totally normal and that's healthy. That's where you want it to be. It's not at all a housing crash. Last thing we're looking here is the new listings in Dallas County. It's barely squeaking up, which is good. That's something you want to see, but it's nowhere near where it needs to be at 420. But it's way up from 126. That's how many in all of Dallas County, huge Dallas County came on this week. It was 126, but now we're up to 420. We need to get closer to these 700s would be great. Yeah, somewhere in the 5 to 700 range would be great. Let's put back our 90-day. So you can see historically we want to be in the 400 to let's say 750 range. And right now we're at 299. On the 90-day average, not on the actual weekly. But this is an easier way to see the trend than if you look at the 7-day. It's all over the place, very sharp. But it's good to see on the weekly that it is trending upwards. But still nowhere near enough homes to be worried about prices dropping any further, at least at this time. So because Dallas County is big, I very quickly wanted to go through and just do Dallas, the city by itself. And these reports, you can sign up for this for your zip code for your city anywhere in Dallas County. You can just message me and I can put you on this and you'll get it weekly. The coolest part about this is right here, the Market Action Index. This is just a quick way to look, and it takes into account all this over here on the right. List price, price per square foot, average days on market, inventory, all of this, and puts it into just an easy graphic here to say, is it a buyer's market or a seller's market? And the way to read this is this line. So it's not 50-50 because buyer's market only happens historically about 30% of the time. So really more of the question is, how much of a seller's market is it? So we're going to be referencing this Market Action Index a lot moving forward, so I want you to be familiar with it. But as you can see, Dallas, we're a little more of a seller's market than we were last month, but 46 is not a crazy high number. And another cool thing about these searches, and something that I wanted to show you, was it has market segments. And basically what this is, it just takes all of the data and cuts it into 4 even parts. So let's say you don't care about the luxury homes, you want to know what's going on in this price range. We can just cut out the top 90 and it'll tell you. So right here, the median price of that top line is 1.7. These are the luxury homes. The median of the next line is 645, then 369, then 239. So if you know you're not looking at the 239 and maybe you're looking from 350 to 650, then you might just want to look at these 2 lines and see where are these trending. These are pretty similar, but they're not always that way. For example, if you look at the bottom, then you can see it's still up from last year. So all these points that you see on the line represent 1 year. It's just a quick, easy way to see what happened 1 year ago. We're clearly above where we were last year. So let's check the lower 90-day where, yeah, so this is the like 370 range. It looks almost break even to where it was last year. 355 to 357, so almost break even. So there may be a little more opportunity for you to buy here. And then the upper 90-day. So this is the hottest segment. I think overall, my theory is that people who can afford houses around that 600,000 range are still buying. They're less sensitive to interest rates and that monthly payment because they have more income. So basically, the lower your income, the more sensitive you are to rates moving because it makes such a big difference on your monthly. In other words, if you got enough income where you can afford $4,500 to $6,000 plus a month, those are the people who are still buying right now. It's not that they want to be paying these monthly payments, but they are able to afford it. On the other hand, buyers looking in that 350 to 450 range are going to have a much harder time with a 2,800 to 3,600 monthly payment, especially when a lot of this demographic are coming out of apartments that are like under 2,000 a month. It's very difficult to stomach that jump. So it's kind of like the lower your income, the more sensitive you're going to be to these rates and changes in monthly payment. And I think that's what we see reflected here in this third segment of around 645. These are people, also in my experience, this lines up. These are the people that are still buying. And you can see prices have not dropped in this category because there's more buyers in this category because they're less price sensitive. I will say the luxury market, though, has been having a hard time for a while now, but even it is just barely starting to tick back up. So this is Dallas City. I don't want to spend too much time on this because I want to get to the hottest zip codes and cities. But if you're interested in this, you can sign up even as specific as a zip code, and you can just come look in my zip code, in this price point, what's happening. And you can do this not just for list price, but you can do this for all of the other things we've been talking about. So inventory, anything. So I don't want to spend any more time on this, but like I said, let me know and I can sign you up for this. Okay, so moving on, this next one, we're referencing that market action index that I just showed you. And basically, the higher the number, the more of a seller's market it is. So if you're a seller, you want this number going up. So we're looking at the top 10 right now cities in Dallas County with the highest market action index, which means the best place to be selling your house. Coming in at number 1 is Lewisville, Texas. And let's just take a look. There are only 29 listings. You can see the median list price is trending up. Price per square foot is trending way up. Inventory is trending down. Even rents are trending up. And the market action, you can see, is way up here at 70, which is a big jump from last month. So you can see the gray line, it was back here at 60 something. So Lewisville is the hottest market. Carrollton is our next hottest market. Median list price has actually dipped a bit here. I bet if we were to look into market segments, we could see a little more. There it is. So the top end has been going up. Everything else seems to be flat. This gold segment is trending up a little, maybe the green a little, but the red, the lowest price point, is going down. But this is what's making it hotter, is the top price point has definitely been trending up for weeks. Lewisville and Carrollton are both near each other, similar Similar kind of markets. Grapevine as well is a similar market to Louisville and Carrollton. Interesting story here in Grapevine's median sales price as well. Not really, I mean, I guess a little bit of a dip. Let's dive down. Median days on market at 49, which is totally normal. Price decreases are dropping. Only 23 inventory again, so we would like to see, it would be more accurate if we had a larger sample size, but it is what it is. That's the data we get. Okay, so I have no idea what happened here. There must have been some serious luxury sales going on at this one peak. But so excusing this period that we don't know what happened, we can see things are definitely trending up, probably in all four segments. Certainly in the top luxury side of things are skyrocketing over there in Grapevine. But even here's the one below it, that 600,000 range. Again, I think this is what we're going to keep seeing, is that third tier line. That's where there's the most buyers right now. But no, all of these are trending up in Grapevine. Balch Springs is a surprising one. Balch Springs, if you're looking to sell and you got some in Balch Springs, there's a lot of people buy rental properties and things around there. The houses are more around like the 200,000 and 300,000 range. Let's see, median list price, is 289. So if you got some rentals there, might be time to offload some. Okay, I'm not going to go through all these. It would probably take too long. Irving, Coppell. I am interested in Richardson. Okay, Richardson, a little more of a seller's market, but look at this median list price. That's what I like to see. 68 homes, a little more inventory here. Market action definitely trending up. Let's check the market segments. Yeah, everything looks to be trending up. And I want you to note that it's not just like trending up this week. It's been basically since November. So again, this list is the hottest market if you're a seller. This is where if you've got some property here, you're most likely to get top dollar if you're in one of these cities. But let's see where the buy opportunity is. Okay, buy opportunities. This means it is the closest to a buyer's market. Remember, under 30 is buyer's market. So 32, that's very close to a buyer's market. But I don't actually know anything about Ferris, Texas. Only 16 inventory with a median list price of $449. Okay. If I had to guess, I would say this is an area with a lot of new build communities. Yeah, this is kind of a weird market. That's a high median price point, not a lot of inventory. Yeah, you can see it looks like there's probably a new build community that popped up here. Yeah, okay, this is weird. The top 90 is 2.4, 3.9, 5 million, 6 million. I don't know if this is like large land sales or what's going on there. So I don't know enough about Ferris to say anything about it. I do know Seagaville. This again is one of those, a lot of people will buy rentals here. There's a lot in the like 200 to 300s. Yeah, median list price is 328. It's definitely trending up. So it's at a 40. It's kind of well, it says right here, slight seller's advantage. Let's check out the segments. Yeah, at least if you're looking for a higher end home here, these have trended way, way, way down. But let's look at these lower segments. If you're looking for a rental, it's been pretty good decline. So this would be a good place if you're in the market looking to buy a home or a rental over here, because things have been trending down and they're looks like just about to start getting flat. And if they follow the rest of the market, then you would expect they're going to trend up after that. So there definitely could be some opportunity here in Seagaville. Sunnyvale, that's going to be a hard one to track because there are a couple of neighborhoods, but most of it is very large land with very large houses. One that we're definitely interested in is Dallas, Texas. And this is, so you can see Dallas, Texas is at a 46, not a crazy hot seller's market. Of course, we need to segment that out. And just looking at the trends, you can clearly see things are trending up. Median days on market clearly down. Inventory clearly down. But let's look at, if we remove the luxury, yeah, this is actually kind of the same where prices have still been trending down and it looks like they're just about to flatten out. So kind of surprising, but the buy opportunity might be in Dallas. And up next, we're going to actually look at some specific zip codes. So actually, let's move on. You can see these are where it is closest to a buyer's market, but really once we pass 50, it's still a pretty seller's market. So I would say you're looking at these top, probably up to Dallas at 46. There's still some opportunity. But let's go to zip codes. Okay, so looking at the same market action index, but by zip code. So there are a lot of Dallas zip codes where there might be opportunity. So let's go take a look. We're going to skip Ferris because, again, we don't know much about Ferris. Okay, I can tell just by looking at these zip codes, I know these types of neighborhoods. They're the transitioning neighborhoods. Let's take a look. So first one is 75209. So what you've got here is right by Love Field Airport, which is awesome. So you've got Bluffview in here. Nice established neighborhood. Houses are expensive, but the bulk of it, what you're seeing here, is just south of Lovers, which is Not quite as nice. Certainly people who live in Bluffview will tell you that. But you've got a lot of, well, houses like this. So the house next door to this could be $1.5 million, $2 million. And then you've got this one renovated at $500,000, which is actually pretty nice for what it is. But it's only 756 square feet. So you're basically looking at houses that are going to be sold for lot value, or so you can see this house here is representative of a lot of the houses, and then you'll have a new build right next to you. Okay, this is perfect. This is your view. So this is your great balcony at your $1.3 million home, and that's what you're going to see, a bunch of these little houses. Yes, perfect. This is what I was looking for to show you what the neighborhood's like. So all these zip codes where there's opportunity are like this. This is what your neighbor's houses look like. You're kind of getting in early. You're just south of Bluffview. You're right next to the airport, and you know that all of those little, $500,000 homes are going to be bought for lot value, and down the road, your neighborhood's going to be worth a lot. So you're buying one of these homes now at 1.3, 1.4, hoping that once this neighborhood's complete, those are going to be worth more than $2 million because the neighborhood's going to be much nicer. So if you ever want to build a house, this is actually a great area where you could get something small in the like 400,000 or 500,000 range, or even something like this, and you just Airbnb it out to all the people coming here to visit at Love Field Airport, and then down the road, you've got a lot that you can build a multi-million-dollar house on once it's turned far enough that you'd like to live there. Okay, the next Dallas zip code is 75212. All right, 75212 is the exact same as the other one, but not anywhere near the prices yet. So this is the Trinity Groves area, and this is downtown. It's incredibly close. Like, you cross this little bridge, you're downtown. So the location is prime, and people started doing this a couple years ago, where you can get, you could get a lot here for probably under $225. So you could get a lot here for $2,000 or under. Let's just see. I mean, obviously, this is something you would tear down, but same idea. If you wanted to have, you could hold this as a rental pretty cheap until the area turns a little further. So this house is a great representation of what's going on in this area. You look at the neighbors' houses, they're not quite bad enough to be torn down, so those will probably be your neighbors for a while. You've got this cool new build. Not crazy about the floors, but it's a new build. But let's see if we can get a view out of these windows. Usually there's a pretty good view from the windows to see what the neighborhood looks like. Smaller backyard on this one. Okay, perfect. So this is your nice new build here. You see your neighbors' houses, but you see the lot sizes are pretty big here. And then look at this one, 2 down. They have like 5 different roofs. They took up their whole lot. So that's the kind of neighborhood that it is. Here's a new build, here's a new build, but a lot of it is just waiting to be sold and torn down. So you're just getting ahead of the curve. Look that's where downtown Dallas is. It's very close. So again, would be a great area to buy a rental, have somebody live in it for break even, and then you're gonna have a prime lot, 5-10 years down the road when all this gets developed further. The next Dallas zip code, 75223. Okay, this is another very similar zip code. The difference is this Hollywood Santa Monica neighborhood is zoned to Lakewood Elementary, but right here down, I believe it's Cameron Avenue, the neighborhood just totally shifts because all the houses on this side are zoned to Lakewood Elementary. There is a large concentration of beautiful Tudor style homes. As you can see, there's nothing on the market. It's a very desirable and competitive neighborhood, but then with no clear divider at all, you're just driving down Lindsley and then all of a sudden the houses look like... So this would be an example of pretty much lot value. 250 is close to lot value. I just sold a lot around here actually for 245, so I know that's pretty close, but this is what you would get for 250. You also have to be looking out. A lot of these are duplex lots, which are definitely worth a little more. They don't actually sell for a ton more, but let's see if I can find a Okay, so here's a duplex. This is an example of what you do. This neighborhood is called Mount Auburn. It's another one. Again, you can buy a house that's good enough to rent out at a break even, and down the road you're going to have, this is what's being built. So these under contract, listed at $600 a side. Check it out. Very nice. So if you're looking to buy in Dallas, this is another opportunity where, this townhome in any other neighborhood would be worth quite a bit more. This one's actually very nice. A lot of these are kind of poorly done, but there it is. That's your neighbors for now until it continues to turn, which it has come a crazy long way. There are actually a lot of new builds in here, and a lot of the duplex lots are the first ones that have been having really nice stuff built on them, but there are some larger single family homes as well. Like this one, for example, listed at $875, 3,200 square feet, but not a duplex. And it already has a new build next to it. As you can see, same type of houses across the street for now. Yeah, very nice. Okay. So this is the Mount Auburn neighborhood, obviously Hollywood, Santa Monica. You would be closer to 650 plus, as well as, I believe, yeah, this one backs up to the Santa Fe Trail, so you can just pop out the back. You go to Santa Fe Trail, which goes over to White Rock Trail, and you can ride your bike around the lake. Dallas has a big trail system, but again, this is a neighborhood where that's what your neighbors' houses are going to look like until the neighborhood transitions, but not a bad place to buy something. I mean, you could build now if you have the funds, but if you're just looking for a nice place in Dallas down the road, you could buy in any one of these areas and just have it break even, have it pay for itself until you're ready to build. Okay, up next, 75208. 75208, this is kind of a hard one to discern anything from because you've got this Kessler area. It's very nice, a lot of houses, well over $1 million. If you're looking for a deal, it's probably going to be in this Winnetka Heights. This is actually, you get some good bang for your buck as a buyer. Not going to be as easy to find as a rental because it's still a pretty desirable area, close to Bishop Arts, close to Kessler. But let's take a look at this, for example. Yeah, I think this is pretty representative what you get. Under 500, pretty good size, looks nicely updated, and it's close proximity. I'm sure you could, walk or bike over to all the shops and restaurants there at Bishop Arts. So this is a good area where there's some opportunity right now. It is more closer to a buyer's market here. As you can see, we've had a $1 price drop. That's very representative of this market. Okay, next Dallas zip code, 75225. Like I said, the luxury market has been hit harder than some of the other segments, but I don't know how much opportunity you're going to find here. A lot of this is here, University Park, a lot in the 3 million. So yeah, I don't know. I guess it depends on what kind of deal you're looking for. But I guess if you're looking in University Park, now is a good time. Let's just take a look at one of these. Ooh, I like this one. Oh, I really like that entry. Look at all that light. Beautiful. It's got the pool. All right, who do I know that wants to buy this house that can have me over? Oh, I really like these. I have these exact lights over my dinner table. Oh, love these beams. Look at that woodwork. Yeah, I just love all the natural light. Everything is very reflective in here. Love this house. All right. Well, that is what 3.75 million will get you. Up next, 75218. Okay, 75218. This is interesting because it covers Little Forest Hills, Casa Linda, and Lockwood. A lot of people do want to live over here, so this little pocket you might find some rentals, just specifically that one, say like this, 280. I mean, literally just that little triangle with this zip code would probably be good for rentals. Let's check it out, 280. Not bad, not bad. Yeah, that looks like it'd make a pretty good rental. Otherwise, we're looking at Lockwood. Now, Lockwood is a little bit down here in Casa View, different zip code. Houses are like 250 to 350. A lot of first-time buyers, young couples are buying in here, but it's the same where your neighbors' houses are probably falling over. A lot of cars parked on the street. It's come a long way, but still has a ways to go. So a lot of that, this pocket up here across Garland Road feels like that. And then like there's a Home Depot right here. There's a Home Depot right here. And so it's like Lockwood is like just removed from Casa View. So it's like the further you get in here, up in the L Streets, Old Lake Highlands, you get a little more insulated. So Lockwood is kind of on the border of that. And I think that's probably why it's a little slower than some of the more insulated neighborhoods. But also, so Peninsula, very nice houses. Yeah, if you got water views or something, it's going to be quite expensive. All this easy access to White Rock Trail, obviously. Down here as well, though, Little Forest Hills is a super fun neighborhood. It feels a lot like Austin. It's very eclectic. All the houses look very different, but a lot of them are being built up like, let's see, like this, where they're kind of maxing out the house on the lot. So this price point has been going way up, but wow, $350. This would be great to buy and hold as a rental. Because as you've seen already, you're building houses you know, above 1.3 million on a lot that size, and you're getting it for 350. Yeah, I mean, lots used to sell for like 400 here. So something like this is actually a pretty good opportunity, especially as a first-time buyer. If you could buy in it and live in it, if you're, you know, can fit in that size of house, although we can't see the condition of the inside. But if you could stick a renter in there or live in it yourself, that is below what has been lot value for the last few years. So here's another example. Yeah, I mean, this one's listed way higher, and you can see it's not in great condition. So Little Forest Hills, there's buy opportunity here. At least on this one. I think someone should go buy this one today. Okay, let's look at our last zip code, 75203. Okay, 75203. This is actually a very interesting zip code. I think it's a great place to buy a rental. More so on this side, the Cedar Crest area. So this is actually the Dallas Zoo, and right across from this, above the highway, they've just built, or they're building a what's called an upper deck park. So a park that goes over the highway. If you're familiar with Dallas, Clyde Warren Park is the same. So they're building that currently right over the highway. They've just been expanding the highway down here. So there is a ton of money coming in for development here. But there's a lot of opportunity back here in the Cedar Crest area, really all around the zoo. Let's take a look. Where could you find a rental? 244, that looks good. Okay, this is a perfect example. 244 for a 3-bed, 2-bath. Okay, I mean, it's rent grade. It's rent grade. Yes, you could find a renter in there. And I just think with all the development coming in, I really do think that prices are going to increase over here. I think it's been a little bit overlooked because, like all of these other areas, your neighbors' houses may look like they're falling over, or they may have bars on the window or things like that. But it's been turning a lot. There are new builds in here. Let's see if we can find one. So this would be a lot value situation, 140. Okay, this is totally representative. These sell all day long, 1,800 square feet for 379 already in these same neighborhoods. So you see a new build, 379. You could have just bought that other one for 250 and already have a tenant in it. And this is what's going to be happening to this neighborhood. See, there's kind of the neighbor's houses, a lot of window units, which matters because you can't do FHA financing if it has window units. Look at the size of these yards. There are huge lots back here. These all have really big lots around here, which is good. That's ultimately the value. If you hold it long enough, the value is just going to be in the land. So if you're looking to pick up some rentals, I do think that this area would be great, as well as the Market Action Index is telling us. This is one of the top 10 zip codes to buy in Dallas right now, as far as it being closer to a buyer's market. So that's it for me, guys. Thank you so much for watching. I realize this video is probably a little long. Bear with me as I get a hang of this. I'll probably segment these out into a few different videos in the week. But if you got any value out of this video, I would love if you could give me a thumbs up, and I hope you'll stick around, and I'll see you in the next video.